This conference will now be recorded.
Hello, everybody. This is Florin from London Academy of Trading. Welcome to another video from London Academy of Trading with a few insights in regards to direction of market, trading, and so on. What I would like to discuss with you today is something that we came across on the trade floor while trading, while talking to other traders, while understanding how retail traders are positioned. And I think the main point we're trying to make with this video today is how important it is to understand what is driving the market, what is the environment we're trading in, and how that can impact our trades. Now, before we go deeper into that, I would like to bring in the S&P 500 chart and DAX 30 chart on the screen, and just to give a bit of history behind what has happened in the chart. This is a daily time frame on S&P 500, and today is the 6th of December 2023. So we can see that on the daily time frame we did have quite an aggressive move to the upside, which originated from a miss in CPI in the US, and that drove the market approximately 12% up. Uh, very aggressive movement in the market, and we can see that the German DAX has done as normal. Well, as normal correlation, when correlations do work, we can see that the German DAX has been following suit, and the move to the upside is confirmed as well in the German DAX. Now, obviously, following the miss in the US CPI, the market has been looking at potentially repricing future interest rates from the Fed and from ECB, and pricing in a potential direction for the future. That has been quite aggressive, as the chart can show us at the moment. And we have seen little downside, very little retracement in the German DAX, and for that reason in S&P 500 we can see that the S&P 500 has started moving sideways for a few days, as opposed to the German DAX, which has been moving aggressively to the upside. If we were to make a comparison between the German DAX, we can see that we had a previous all-time high that was broken overnight, tested and broken. We had ADP numbers from the US not long ago, and at the moment the indices are continuing their move to the upside. So having said that, what I'm going to try to do is I'm going to go back to the presentation I prepared for you, and what I'm going to try to show you is potentially why retail traders lose money. And that is because at times we fail as retail traders to understand the current market environment, what is driving the market. For that, for me to exemplify that, what I've done is I went on online, and I've tried to find retail positioning when it comes to the two indices. So on the left hand side you have S&P 500, which the ticker for this on IG is US 500, and Germany 40, obviously for the German DAX. Now we can see that both indices overall numbers are tilted heavier towards the short side, which means that retail traders trading on that broker in particular are positioned for shorts more than anything else. Now, following the move that we have to the upside, and the repricing in interest rates, there's been a lot of discussion about is the market pricing this correctly, but as always, the market is always right. All we can do is try to understand the direction of the market, what is causing these moves, and potentially trade in the same direction. Now, from personal experience, the best trades I had in the past were trades that I had direction from the fundamental analysis, and then I've defined my risk through technical analysis. Now, there's different ways we can look at the fundamental market. We can analyze the fundamentals behind the market, what is driving the market for quite a long period of time. But for this particular video, what I've prepared for you is I've started by looking at two different factors that have influenced this market, and I started by looking at seasonality. And I've done exactly the same thing like I've done with the two screenshots above with retail positioning. On the left hand side we have seasonality for the past 5 years for S&P 500, and we have seasonality for the German DAX for the past 5 years. Now, what we can notice is that the statistics tell us that the month of October, November, and December have shown historically moves to the upside, should we have a reason to trade the market to the upside, the seasonality would probably help us. But we can't always trade just on the back of seasonality. Obviously, we need a fundamental reason, and that fundamental reason did come forward in a move that we had a few weeks back, which was originated from the miss in the CPI data. And like I said, in the repricing of rates and an environment where now the major banks are looking at not necessarily cutting straight away, but holding for a period of time and then cutting in the new year in 2024. Another way that we could have looked at this and potentially position ourselves for continuation to the upside would have been using something like an interest rate tracker. This is a screenshot on the left hand side that shows us the implied probability for the Fed interest rate decision on the left hand side, and on the right hand side we have ECB interest rate probability as well. And we can see that we have two lines: the current line, which is the line that's in a kind of lighter green, and then a week ago the line in a darker green. And we can see there's a divergence of where is the market anticipating rates to be in the future for the Fed, and the same for ECB. Now, if we were to combine these two forms of analysis by looking at seasonality and by looking at what are interest rates probable to, what is the probability of interest rates in the next year, that would definitely tilted our analysis for potential longs in indices. But as any other broker, any other platform that we go on and we try to trade, everybody has statistics. Everybody says that um, on average 80% of retail traders lose money. This is probably where retail traders are maybe coming short in their analysis, and just at times relying on technical analysis as opposed to incorporating fundamental analysis in their trading. And like I said, personally, trading in the past, the best trades that I did have were trades that I got the direction from the fundamental market and then defined my risk through technical analysis. This is just a point of view. This is something that we've noticed. We are seeing quite strong moves to the upside, and as I record this video, I can see that the German DAX is still moving to the upside, and S&P 500 is trying to break today's high. Will that carry on? Probably we're going to see more sentiment being priced in the market after this Friday, when we're going to have non-farm payroll numbers coming out. Probably should we see major deviations from consensus to either side, we can obviously see either continuation to the upside or a retracement. We must keep in mind that we're coming very close to a very busy week next week, when we will be having, let me just scroll this down. We will be having the Fed's rate decision, ECB rate decision. So the Fed will come out with a rate decision on the 13th of December 2023, with ECB the next day on the 14th of December 2023. Needless to say, this is going to be a very busy week. This is gonna probably give us a lot of trades towards the end of the year, and probably this data release is going to conclude what has been a very busy year. We did have some problems earlier in the year with banks going into problems in the US, Europe as well, and also we did have unfortunately the conflict in the Middle East, followed by the pricing in of interest rate cuts for next year, both for ECB, for Fed, and most probably for Bank of England. Having said that, guys, I think that the conclusion for this video would be, if we are trading, we should always try to get an understanding of the fundamentals in the market, what kind of an environment we are in, what is driving the market. Maybe back that with seasonality, maybe back that with macroeconomic events, with deviations, with surprises on deviation from consensus, and see if we can get a trade from the fundamental market. But coming back coming back. I think this is quite obvious. Retail trader positioned short on indices at the moment, and the indices have been moving quite aggressively to the upside. I hope you found this video useful. Please follow us on social media, and we will be keeping you posted with more market insight. Thank you very much.
This